The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 11th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the buyers and the sellers, what the bulls and the bears are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Sorry for the delay out there, folks, but as I was coming on, the system just went down. Maybe Skype, maybe not, who knows, but we are back up and running, although not on all cylinders. But right now, the market is on all cylinders. You've got the Dow trade up 133 points at 18,628. S&P up 11 points at 2187. NASDAQ Composite up 27 points at 5233. Russell 2000 up 7 points. She's trading at 1230. The DAX closed up 91 points. The FTSE up 48. Gold is back $2, no big deal, trading out at 13.49. Silver's off 11 pennies, trading at 20.05. Light sweet crude, big move today, up $1.77. Back up at 43.48. Lead the charge here to the upside. You've got Granger WW up $10. That's 4.5%. Middle B Corp up $8.73. That's 7% to the upside. Biogen BIIB up 2%, $6 and change. Regeneron Pharmaceuticals up $6.80. Brinker International up 6, Macy's up 6. To the downside, we've got Vista Outdoor Inc. down 17% on 2.7 million shares. That's down about $9. Schulman A Inc. down 26%. That's a stinger. Essex Properties down 2.5% or about $6. Simon Property down about $5 as well. So where do we begin? Usually I ask that question when we start the show, so we must be starting here. I think where we begin, and the reason why I ask that question is because that's really what's the most pertinent information that I can provide to you at this moment. I think the most pertinent information, and we're just going to go over and take a look at the daily equity futures contracts to see what it is that they are doing. So if you're watching us on TigerTV, you're going to see 4 different window panes charts. The upper left is the ES Mini daily chart. The upper right is the NQ daily chart. Lower left is the Dow equity futures contract. Lower right is the Russell 2000. Let's start with the S&P, the ES Mini first. It's running right now right into a potential resistance. Now, the number is 2183.50. We are trading at 2184 as we speak right now. So where this closes will go a long way to saying, hey, you've got another breakout that could be underway here. So the key number to be, you've got the ES Minis trading right into resistance, 2183.50. We're actually 2183.50 as we speak right now. We'll get back from this break. Let's go continue to take a look at the daily equity futures contracts. We'll look at them this way. We'll look at them a couple different ways, and we'll look at anything else that you'd like. Just give me a holler, 877-927-6648. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader.
As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're going to take a look at the equity futures contracts. Now, we were talking about the ES Mini. We're talking about how this thing has made it up to resistance. And I'm going to apologize ahead of time because my charts, my Ninja Trader charts here are really screwed up right now. And there's no way for me to be able to fix all this during the show. I'm praying that I'm going to be able to fix it. Otherwise, there's a bunch of rebuilding that I have to do. System just simply locked up, froze up, just as we were about to come on the air. And I had to do one of those things you hate to do, which is a total hard boot out there. And so we're limping along. But here's what we know about the ES Mini as we speak right now. So we know that price is right up against resistance. And that is a TAS daily profile high. What we also know is that since the bottom formation down here on June 27, today's high, because it exceeded the high from a couple of days ago, what we actually see here is a seventh wave session out here inside the ES Mini. So not only is there some resistance for us to be focused on and taking care of and taking a look at with regard to the TAS market profiles, yesterday's candle was a bearish engulfing candle. Now, we had a great workshop last night. You know, really, if you would like to, if you were thinking about it, you were sitting on the fence and were interested in taking that workshop, if you send me an email, I bet you we can get you in and you can watch the archived show. But thank you to all that attended and obviously all that are going to be watching the archive of that show. One of the things that you will notice is that yesterday we did get a nice bearish reversal signal. Now, that reversal signal, how it's going to really help and apply to today and tomorrow because of wave number 7. And I won't be able to be with you tomorrow. There's no way for me to get back in time from a meeting that I'll be at. So, you know, let me give you what we really want to be focused on and paying attention to. So it's really the high right now of August 9th that becomes our resistance area. So we've got TAS market profile resistance, right? That was at about, what, 2183.50 if I'm not mistaken. And 2183.50 I'll talk to John Logan. I don't think this is where it comes from. But 2183.50 happens to be the high of that trading session on August the 9th out here. So and what that says to us, and it's really important, is that any close above 2183.50, there's no reason for the market to not continue to move to higher ground out here. Now, you also see Stevie's red line that is on this chart. We're just focused just on the S&P futures, on the ES Mini. So prices run right back up into resistance. So closing below 2183.50, if tomorrow's candle, excuse me, does not take out today's high, you will have a seventh wave move. You will have prices just simply run up into resistance. And these seventh wave moves, they are important for us to be paying attention to, because oftentimes that's where you start to see the largest reversals take place out here. And usually it happens relatively quickly. Doesn't have to. But you want to be watching for that. So that's what the ES Mini is looking like as we speak right now. Let's take a look at what's going on inside of the NQ. Now, in the case of the NQ, price is up above any kind of resistance, whether it's a TAS market profile, which is really down to 47.47. That's a daily chart out here. And as well, yesterday, up until the last few moments of the contract close out here, it was also going to be a bearish engulfing, but it turned out not to be because of that close out here. So what we've got, and see, this chart is all messed up. So, but we're only in wave 6 in this case here, inside of the NQ on the way up, and I don't even know that I've got enough data there to tell me whether we've got a price relative strength divergent pattern. Anyways, that's the NQ. There's no resistance really in sight here. Let's go take a look at the Dow. Let's go see what it's doing now. Dow futures today extremely strong. If we take a look at what it had been doing for the last 3 days, small-bodied candles running into resistance of its TAS daily profile. Let's go ahead and put that up here on our screen. By the way, that is priced at 18,521. You are trading at 18,580. So that is good. That's important. Let's go take a look at what it's doing, though, on this move up here. And what we can see is that price is now beginning to rise. No seventh wave or anything along those lines, but price is now beginning to rise and doing it with less relative energy. So even though it's a strong move today, even though it's taking out resistance, it's doing it with one of those cautionary patterns that are out there. Now, it's only cautionary until the bears actually show up. Now, today's trading session is not over. There was a question inside the den says, hey, based on what I have shared with you before, candles like today and take a look at the S&P and the Dow typically indicate that they would close at the high. So we'll take a look at that as well. But what I will say to you, Gator, about that question is that it really, you've got to pay attention to what's going on inside the equity futures contracts, which is one of the reasons that we're taking a look at that out there. So on the daily chart for the ES Mini, we know we have a potential topping pattern that's in place. We can see the price inside the daily on the Dow futures now beginning to rise, doing less relative energy out here. Inside of the NQ, we don't really have a whole lot out there. Inside the Russell 2000, don't forget, on this chart here, there's a 10-minute delay, but its resistance level, and this is a strong resistance level. The reason that I say that, which, by the way, that's 1234.30, is because that point of control is closer to the top of that box. That point of control is 1226.62. The way that that's lined up, that is where the bears are ready to fire away. So 1234.30, and right now we are trading right around 1229.10. So that's what the equity futures contracts tell us. What does that mean in summary? It means that the ES Mini, we're going to probably really keep our eye on that one, because that one's up against some significant resistance out here. It says that today might be it. That might be in at a blow-off top for sure, because it hasn't really blown off to the upside, but just simply patterns that are fulfilling out here. And so, yes, tomorrow's candle will be important as well. The Dow moving higher with less relative energy. It can continue to do so. The NASDAQ, the NQ itself, doesn't show us any signs of resistance, and the Russell 2000 is really dead ahead. Now, there was another question that came in that's really going to tie into the NQ chart, because we're going to actually take a look at the indices out here. So I'm going to pull over the NDX 100. Frank from Gloucester wanted me, did I say that properly, by the way? Probably not, and certainly not with an accent. But Frank wanted me to take a look at the QQQ series ETF, which I would be happy to do. But remember, there's a good tick in there supposedly. I've called the data provider a couple different times. They tell me, they assure me that no, it's a good tick out there. So we're going to take a look at the NDX 100, right? We're going to look at the underlying instrument out here. And when we take a look at it, we're going to start from the low that formed out here on June 27th. And here's what we're going to find, that today's push higher inside the NDX 100 also moving higher and doing it with less relative energy. Now, this guy has both a 7th wave move and moving higher with less relative energy, and we've got an A to B equals CD pattern. So this has got Stevie's 3 most favorite patterns to identify reversal areas, whether it's to the upside or to the downside, that are in play right now. Now, the A to B equals CD pattern, this happens to be a 1 to 1.618, A to B equals CD. I'm going to go ahead and take that off the screen right now. But what we can see is prices moving higher, doing it with less relative energy. Now, you might say, hey, is that a big deal? I don't know. You look at my chart out here. You go back to the high that was put in April 19th, 2006. And you can see that was off of a nice move from February 8th, which, by the way, was the same kind of a pattern where prices moving lower with less relative energy. Then it was moving higher with less relative energy out here on April the 19th. So, yeah, this is a pattern to pay attention to. Now, back to a similar candle situation that we saw inside of the ES Mini. And we get back from this break, we're going to look at it, but it's basically the high of 2 days ago. So the key number today is going to be 4811.01. We're trading at 4805.68. If we close below that, we've got resistance all over the place. You still need to see a lower high tomorrow, though. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NADEX, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their trading platform. NADEX never charges a fee to use their platform, which even includes real-time charts and full customization capability. NADEX's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. NADEX's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I'm reminded of that scene in Top Gun when they say, you might remember the phrase is, that MiG really messed him up. That MiG really messed him up. And the MiG that flew by my computer system and made it crash, that really messed me up too. So what a bummer out here. Okay, so let's go take a look at some other things. Let's go look at, tell you what, let me flip over to another tab here. Let me see if this thing has at least fired up. It's where I'm going to take a look at each of the daily indices to see what other patterns might be out here that we want to pay attention to. Let me just take a quick peek out here. So let's take a look at what might also be going on out here. So let me pull this over. Now this is going to be, this is one of the newsletter, this is one of the charts that's in my daily newsletter service, Mastering Probability. And I think we might have talked about this a couple of days ago. Now the top portion of the screen, and there's a lot of lines out here, but they all have meaning. So let me describe to you some of that meaning. I believe we were taking a look at the VIX index a couple of days ago. I know we were. And one of the things that we were noticing, one of the things that I had said was, hey, a couple of days ago, this thing made a sixth move to the downside. And I said, boy, wouldn't it be nice if we actually got a seventh wave move to the downside? Because, again, at that seventh wave, that's where you can see the most significant declines or changes in the changes in trend in marketplace. So whether it's to the upside or the downside. Now, you know, the ES Mini for the most part, not the ES Mini, the S&P 500 have been trading in this horizontal trading range for quite a while. There was a little bit of a breakout of it, and then price came back in. And so, you know, that actually gives us a price projection out here, consolidated measure move of about 2,200, 21.99 or so. We're at 21.86. So that certainly is a possibility. The S&P 500 is not reciprocating with regard to the same wave count out here, though. But it really would be the VIX that I would be paying attention to. So maybe now, what does that mean? That would mean that if that were to occur, you would see the VIX move down below $11.37. That's the low that I have from August the 10th. So that's the low that you would be focused on and paying attention to. So that's another thing for us to focus on, another area for us to focus on. But really, we took a look at the now the Dow Jones. We were looking at the ES Mini. The Dow Jones itself, the index, is doing the same thing, meaning that it is now beginning to move higher and doing a less relative energy. Now, in the case of the Dow, that really doesn't matter until we see some type of a bearish reversal signal that would show up on the screen, and we don't have that here as we speak just yet. Boy, all my charts inside the Russell 2000, let's take a look at it, see what it's done as far as the cash index. Now, the Russell 2000, a bit weaker than the other candle signals that are in the case of the Russell. The real resistance area is the trading session here, which is August the 8th. Now, the reason is because there's a 4-candle reversal that is out here. So the real resistance level. And even if the Russell gets up above that, which is 1235.80, if it closes back below 1235.80, I'm not saying today, you know, I won't be here with you tomorrow, but you want to be watching for these levels. That would then all of a sudden get you to that seventh wave move in the Russell 2000. So we're really nearing these areas here where, you know, one's got to be careful. There's no question that, there's a seasonal pattern that is out there that seems to be taking hold. That is the presidential pattern. I would show it to you on my screen out here if I could. I think that thing has gone to the, well, maybe not. Maybe will this show up? Let's see here. Will this show up? Yeah. Let me put this out here for you just so you can see. So what we might be experiencing right here with all these potential false tops is, and that's the presidential pattern. That is the bottom portion of my screen out here. That's the eighth year of a second-term president out here, and that says that there was a viable bottom in July. We know that to be the case, right? We also know that there was a summertime bottom in June. So we know that is been dead on, and that end of June bottom, that's true with regard to the seasonal top, and this then says that the markets would move higher into the middle of September out here. So that really may be the underlying pattern that is in play out here. It's a cycle. It's like a tide, and you just simply can't get out of it. Because what we can clearly see here is that July 20th, so let's take a look at the Dow. July 20th, if the markets were following the typical annual cycle, the high inside the Dow of July 20th would not be taken out. So let's go see. Was today's high? I believe that today's high actually did that. So let's go look at this. And July 20th high, has been taken out. So if we see it close above 18,622, and we go back and take a look at those cycle patterns, one thing that we can eliminate, for the most part, is that we're not following along on the annual seasonal cycle process, and instead it is the presidential cycle in the bottom that is the underlying element of what's going to go ahead and continue to move these markets higher. So, moving into September, and we're only at August the 11th, so that would be another 3 weeks, maybe more, 3 weeks to a month. I'd go with a month, about another 4 weeks worth of markets moving higher. But then, the market doesn't have a choice out. This is where I've been saying to you that, all of the political hogwash, BS stuff that is out there look, okay, I'm a different host than those guys that are on Bloomberg and CNBC and Fox Business News and you name it out here and everything else. The market's got these cycles and these patterns that are truly the underlying prevailing predominant push that you want to be paying attention to. And so this says that once we get to that high, whenever that does occur out here, that we should anticipate a fairly good move to the downside. Now, I don't use these cycles, so to speak, to truly measure the depth of a move or the strength of a move out here, weakness of a move. We just know that it's coming, and then we just simply play things by ear, as they take place. But then what I can tell you, and I will just say this with certainty, that the actual bottom that you really do want to buy is that presidential buy, is that fall bottom out here. And look, I anticipate and expect, especially with the news media and all of the horse manure that is out there, expect that to be maybe one of the hardest bottoms to buy. It's going to be ugly, I'm sure. It's going to look, there's probably going to be Zika spread all over all 50 states out. I mean, hope not. But it's going to be just simply horrible. The news is going to be blaming each side out here, and the market's going to go careening lower. And that is, and you'll certainly want to be a subscriber of Mastering Probability, because we're going to identify, that bottom. And you're going to want to load up. And the reason that you're going to want to load up, and I'm talking about 100% all in, is because what the market does after a presidential term like this, after in the first year of after an eight-year president out here, is the market on average moves higher by about 8%. That's not including coming off of this fall bottom out here. So the one that you really want to be kind of licking your chops for is that bottom. And you know what? It's very likely, because most October bottoms are hard to buy. And I've got to believe that this one here, because of the I won't call them bad names. It's just not good. But just simply because of all the press coverage that's out there, that's going to be the one that's hard to buy, and you're going to want to do it for sure. This is Steve Rhodes with TFNN. Dow's up 130, S&P's up 11, Composite up 25 points. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You know, if you're watching this on Tiger TV, my screen right now has got the S&P 500 that takes us back to that Ebola scare. It takes us back to that October bottom. In this case here, it came in on October 15th. And that was the really the first sign that the bottom was put in. And the reason why I say that is because that's when a pattern completed out here. You know, if we take a look at the A to B equals CD to the downside that formed, it began on September 19th. Your first move was all the way down to a nice little doji candle out here on October the 2nd. Makes a little bit of a retracement, nearly 0.618, 55% to be exact. Then it goes ahead, it makes a 1 to 1.618, A to B equals CD. Now, how do we know that that's where price wanted to stop? Well, we know that because we got that nice little reversal signal, that nice little hammer candle that formed out there, and that was our clue. So knowing that the market, on average, over the last 84 years, forms a bottom in October, you're then waiting for the pattern to arrive out here. If we take a look and we come to October of 2015, let's go see what it did. Now, in October of, where is the October 2015? There we go. It was September 28th. My apology. It was that September 28th level out here. Now, that was just a double bottom test, right? Let's see what we were doing. Wave counts. Now, no wave counts down there. There was an A to B. You can clearly see the A to B. I can clearly see the A to B equals CD pattern out here. That looks more like a 1 to 2 or so, 1 to 2.618 A to B equals CD pattern out here. But the whole thing is that, you know, take a look at this nice bullish reversal signal that we got on August 26th, and then take a look at that nice little morning star pattern that firmed. Then, of course, price on this trading session here of September 30th, closing right above Stevie's red line. That told us that the price oscillator had had begun to rise, and that is typically a bullish event out here. Right now, again, you can see the S&P 500. We were taking a look at the ES Mini, I believe, before. You can see it's right up against its resistance zone out here. No waves to worry about. There is an A to B equals CD pattern that is in play out here. So I had a request to go take a look. So enough blabbering. And had a request to go take a look at the IBB out here. I haven't checked my emails, but I most certainly will see if anything came in during the next break, about 6 minutes from now. So let's go take a look at the IBB. And says volume looks like it's expanding on the way up. Can we take a look at that, confirm that? So here is the IBB. Let's also, we're going to do it a couple of different ways out here. But first, we're going to answer Dano's question about the IBB. And we can see right now today it's an inside day. What do I mean by an inside day? Prices trading with inside yesterday's candlestick. Now, typically on an inside day, Dano, it's like a little pause button. It means that the existing trend that price is coming from should continue. So that's the message of today's candlestick. Now, with regard to volume, today the volume so far, 867,000 shares, and that's at 145. Yesterday it moved lower with 1.2 million shares. So what we can do is just a quick math exercise. Oh, geez, even all those things went down. Oh, my goodness. Oh, that's a bummer. That's a real bummer. Wednesday, Thursday, August 11th, 7:10 a.m. Okay, let me open up this file here. Man, nothing like a system just simply crashing while you have all these files open. But what I wanted to do, Dano, is just take a look at that volume and see what that straight line volume is. So we've been trading for what? For 4 hours and 25 minutes? 4 hours and 15 minutes, I should say. So about 4. And the volume inside of IBB was 867,000 shares, which says that it ought to do about 1.3 million. And yesterday was about 1.3 million to the downside. So, Dano, I'd say volume-wise, and a lot of times the volume really comes in on the early stage out here. I would say the volume is similar. I don't see it. Here's what I would say: you're posing, hey, is volume expanding to the upside? And at this stage here, I'm going to go with no. If we put this on a 30-minute chart, let's see if all that volume. That's not really providing us with a great piece of information, any information out here. Let me try a 10-minute chart, see if anything pops up. Of course, now I'm getting pre-market stuff out here. There was some decent volume on a 10-minute basis here at about 12:10. And that was pretty good volume that came in there. So 130,000 shares. So in one 10-minute period of time, you got what did we say? 867. You got 20% of the volume in that one 10-minute period of time out there, Dano. So let's just come back and look at the daily chart for you. And let me give you a level of resistance that you might want to pay attention to out here. We'll take a look at TAS market profiles, but we're going to put Stevie's red line on here as well. And so right now the price oscillator is still turned to the downside. And therefore, this could be nothing more than just a little counter trend rally that's in place out here. So the number that you want to pay attention to is 294.23. And that is a number that if you were to see a close above, not a spike above, but a close above it, that would then signal to you that price is going to go ahead and test the highs out here inside the IBB in that $300 range. But otherwise, it's just a bit of a counter trend rally. So that's Stevie's red line resistance, 294.23. Now, we know that that's an important resistance zone. I think we were taking a look at light sweet crude as an example yesterday, right? And I would call Dano if it was you or if it was somebody else. And I gave you a figure and said, don't let light sweet crude close below a certain figure. I'm going to see if we can populate the screen here with this. See if I put in enough nickels. Normally, it doesn't take this long to load, and I probably should not have done it on this screen here because this would freeze up this screen, which is the main screen out here. There we go. Okay, good. And so the number that I gave you, see here, Stevie's red line right now, it's priced out at 41.51, and that was not the number yesterday. Yeah, the number yesterday was probably. It was just slightly lower than that. And what we can see, and again, that's Stevie's red line, what we can see is price bounced right off of that. Right off of that level, it held. All what I said yesterday, no different here than IBB. I said, don't let it close below it. Testing, it's okay. but closing below it is not, because that says you're going to go down and test the lows, maybe take out the lows. We don't know what it's going to do. In this case here, light sweet crude found its legs and found its support at the oscillator on change line out there, and which acts as support and resistance. It's hidden. It's not hidden to you any longer, and certainly not hidden to me, as we just simply keep it on our charts out here. Now, with regard to the IBB, just coming back to it, let's just take a look at what our task market profiles say. And they say there's significant resistance at the 302.33 area, so between 299.49 and 302.33. So in the case of IBB, if it gets above that red line figure, I would say that's where it would be headed to, and you just have to determine whether or not you want to stay in your trade out there. Okay, so hopefully that takes care of that. What else? Bib. Does Bib follow? Well, let's take a look at the Biogen, BIIB out here, see what it is doing. Oh, come on, work with me, BIIB. There we go. So we'll take a look at it. Now, who was asking about this one? Mitch? Yeah, Mitch was asking about BIIB. When you say, does Bib follow, are you referring to the inside candle sessions, or maybe a little more explanation, Mitch, so I just know how to answer that question? Because you asked me a question probably while I was speaking. I got no idea what I was saying at that time that you popped that in there. So maybe, but I'm going to take a look at Bib while maybe Mitch is listening, and he can go ahead and type that in. Let's also really just go see where the red line is on Biogen out here, because certainly had a huge day back here. But rumor, who cares really what it was? 7.8 million shares to the upside, and we've just seen that price just continues to travel within it. Here, before we get off this, Eric, for this break, right now, Biogen, nothing but coming down to test Stevie's red line of support out there. So Biogen looks bullish, certainly not bearish. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by NADEX will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, and thanks to all you out there, fans, non-fans, folks that are just sending in things for me to take a look at for you during the show. So Michael P. wants me to look at ticker symbol GGP out here. GGP, let's go take a look at it and see what we've got. So this thing is moving down with a vengeance today. This is General Growth Properties out here. Big volume to the downside so far for it. That's 5.2 million shares. The last breakout that it had out here with any kind of volume, nowhere to be seen, really. It's down below, Michael. It is down below both a weekly and its daily TAS market profile. So I know you're looking at this from the short side out here. Were there any other signals with regard to GGGP out here? Any other patterns that are in play? Nothing I can see from a wave count. A to B equals CD patterns. I can see one out here. Let's go take a look at it. Your A point was down here. We're just looking for where price completed. May 20th, that's your A point. B point that I'd be using is out here on June 24th. Then it does a one-day retracement, pretty decent one, a 0.382 retracement on June 25th. And it does the 1 to 1.272 A to B equals CD. That was your signal to go short was when the pattern completed and when we got the reversal signal. And, Michael, that came on July the 28th out there, that little bear sash candle. Of course, we're also seeing a close below the low of a hammer candle. That's the hammer candle from August 4th, and we know the expression, if you're long, you're wrong. So you are right to be short on this equity. With regard to where is this thing going to trade to, pull back to, at this stage here, you've just got to take a look at retracement. There's no volume to speak of. There's no high volume low that is going after, anything along those lines. So the next move to the downside is going to be about 28.34. You're at 29.46. I'm not saying it stops at 28.34. That just becomes your next target. So thanks for sending in that request to take a look at GGP, and best of luck with that trade out there. Let's take a look at let's see. Bill wants me to look at the U.S. dollar, Japanese yen. Can I tell you where support is or resistance? And if we take a look at the U.S. dollar, Japanese yen, let's go take a look at it. Let me see if I can actually do that on this chart and give him a red line figure out here. Let me come to the upside up here. So let's take a look at the U.S. dollar, Japanese yen. Where is it? Come on. It's right in front of me. You mean I don't have that out here? Oh, be a son of a gun. I see something else I got to do here during the show. That's blasphemy. How could I not have that out there? Okay, so I don't have that. I can't give my red line there. What we can look at, though, is we'll go answer that question the best that we can. So let's go take a look at the U.S. dollar, Japanese yen. Trade out 101.78. There's a 15-minute delay on this, so it's trading right around that level. And the question is, can I tell you where support is? Well, support is going to be really support is right here, and that's going to be July the 8th. And the reason that I say that, Bill, is because that is the first time that we see any kind of bullish reversal signal. Let me turn off some of these other lines out here. They're just going to mess with your mind, and I don't want that to happen. Let's get rid of the channel. Let's get rid of those TAS boxes. And, of course, there's no volume to speak of. So when we take a look at the last time that this currency pair bottomed, it was on the trading session of July 8th. Now, many people might just go look at the swing point from June 24th and say, hey, is that really support? And I'll say, yeah, there are two levels of support. Why? Because in both of these situations, we've got a bullish engulfing candle. So the trading session here, June 28th, is a nice little bullish engulfing. Man, now I take that back. That's really not support down there at 99 bucks. Yeah, here's your answer. You've got support at 99.99, agent 99, and your resistance, that's up here at the 107.49 level, and that was for Bill. That's the U.S. dollar, Japanese yen. Folks, that's the end of the show. Hey, have a terrific Thursday. Stay tuned. Our man David White's going to be up next. I won't be with you tomorrow, but have a great day. Have a great day tomorrow and a great weekend. I'll see you on Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.